Irish airline Ryanair has been in the news and is considering an end to its stock listing on the London Stock Exchange. So in this segment, I'll take you through what led to this occurrence and how companies get delisted. But first, make sure to subscribe to the channel and press the bell icon to stay across the latest videos from Kalkine. Companies listed on any major stock exchange, such as the London Stock Exchange, need to stay in compliance with certain rules set by the exchange, and if they don't, they can get delisted or removed from the exchange. Delisting can be voluntary and involuntary, but when investors generally talk about delisting, they refer to involuntary delisting. Some businesses voluntarily choose to get delisted from the stock exchange, and this decision may be taken weighing in the cost-benefit ratio, or if they decided they would prefer to go private. In such cases, its shares have been bought out maybe by a private equity firm, and the business may consider it too unviable to have their stocks listed, as legal and compliance costs related with listing may exceed the benefits arising out of a listing. As for an involuntary delisting, this is when the exchange takes action to remove a company as it failed to comply with listing standards laid down by the exchange. The exchange does this to protect investors from secretive businesses who lack necessary transparency for shareholders or for those that do not follow the rules. However, if a company goes out of business, then delisting is a natural consequence. So let's look at some examples of delisted stocks, beginning with our focus subject of Ryanair Holdings Plc. Ryanair is poised to drop its London Stock Exchange listing due to a compliance issue caused by the UK's exit from the European Union, which means it will become the first major company to blame its departure on Brexit. Europe's largest budget airline said trading on the London Stock Exchange has reduced materially as a percentage of its overall shares activity during 2021. Bosses said this migration away from London is consistent with a general trend for trading in shares of EU corporates post-Brexit. The issue is also potentially more acute for Ryanair, as European Union rules mandate that airlines are majority owned by EU nationals. Ryanair has a primary listing in Dublin and has already made some UK investors sell shares this year to ensure it complies with the rules. There's also Alliance Boots Plc, which was the largest buyout in Europe of its time. The company was bought by Kohlberg Kravis Roberts & Co., along with Italian billionaire Stefano Pessina, and its overall value was worth $22.2 billion. Burger King went public in 2006 on the New York Stock Exchange, but it was taken private in 2010 by 3G Capital. Then in 2012, the restaurant chain again went public. Agreco plc's listing got cancelled by the Financial Conduct Authority on the London Stock Exchange. The company was cash acquired by Albion Acquisitions Limited for the entire issued and to be issued ordinary share capital of the company. So there's just a few examples of delisted companies, and it's also unlikely that Ryanair will be the last time that we hear of a company looking towards a delisting in the wake of Brexit, so watch this space. If you enjoyed the information contained in this video, then please like, share, comment and subscribe to the channel, and of course don't forget to press the bell icon to stay across the latest videos from Kalkine. For more information, just head across to the website, kalkinemedia.com. I'm James Preston, reporting for Kalkine.